Hi, it's William Mills, and I'm at Finovate Fall here in New York, and I'm pleased to be joined by Mary Joseph, Senior Vice President, Strategic Investments with Citi. How are you doing today, Mary?
I'm doing well. How are you?
I'm fantastic. Well, as SVP of Strategic Investments at Citi, what key technologies or business models are you most excited about investing in over the next 15 months?
I'd say something I'm really excited about is the companies that are addressing compliance, KYC, AML, that entire space. I think we're seeing a lot of innovation around data analytics, around automation within that space. I think historically, speaking from the bank perspective, this has been really fragmented for banks, right? We've had to work with many different providers, use many different tools in order to meet our regulatory requirements. But now I think you're seeing really interesting companies that are bringing all of that together. They're doing really, really advanced data analytics. They're able to draw insights from both internal data and external signals. And then also provide some predictive analytics as well, and embed that all together within compliance tools that makes it really easy for our compliance teams to look at the data and make decisions, right? So I think that's a really interesting space that I'm looking forward to over the next 15 months.
That makes sense. Well, your career spans across diverse geographies. You spent time at Greenhouse Capital. You invested in early stage fintechs across Africa and the Middle East. How do emerging fintech and innovators differ from those in more established markets, and what lessons can be learned from each other?
Yeah, I think emerging markets are really, really interesting because maybe the technologies may not be as advanced, but I think the problems can be so much more challenging than some of the ones you see in emerging or developed markets. For instance, how do you enable digitized payments for markets where they're mostly cash, right? How do you transition large populations from cash to digital? Because then you can do so much more, right? Once payments are digitized, you can draw insights, you can offer different products, all of that, right? But making that jump from cash to digital can be quite challenging. And so I think what I saw when I was working, primarily in emerging markets was that the challenges working within the markets could be really, really difficult. But once you unlocked that, you could really have a significant impact, not only commercially, but I think also from a development standpoint, from a social standpoint. I would say, in more established markets, what's been really interesting is just the advancements in technology, right? There's so much more data available because in these economies, we're all online. There's data being collected about us at pretty much every minute, every second of the day now, right? And so you can do so much with that data, both for companies, but also in terms of providing services for consumers that are really valuable for them. And so what I think it would be a great way to kind of merge those two, right, is maybe in established markets, looking at ways to add value for consumers using their data, right, in ways that protect them and comply with the regulations that are out there. But then I would love to see in emerging markets being able to utilize more of the more advanced technologies that we see in established markets to again achieve those same goals there.
That makes a lot of sense. Well, later today you're going to be speaking on a panel of investor all-stars, and so you're going to be addressing market turbulence. So what strategies would you recommend to identify resilient investment opportunities during this period of kind of economic uncertainty?
Yeah, I mean, I think since the pandemic, we've really seen a downturn within the fintech market, particularly around VC investments. And so I think what we're now looking for as investors is companies that, one, have really strong unit economics, and two, display expense discipline, right? I think there was a time when companies could raise and raise and raise and spend and spend and spend. And the view was that, at some point in the future, investors would be able to recoup that investment, right? Because the IPO market was hot. We were seeing more mergers and acquisitions. That's not the case now, right? So we need to see companies that are really strong in terms of what they're offering to the market. It's really a pain point that their customers are willing to pay for. I think there's a lot of companies coming up that are taking technologies and kind of trying to find use cases for them, but those use cases may not be something that customers, whether that be businesses or consumers, are necessarily willing to pay for. So I think looking for opportunities where there's a clear use case, that customers want to pay for. The companies are disciplined, have strong unit economics, and are keeping control of their cash burn. I'd say those are the three areas that I look for resiliency.
That makes sense. So I think your panel is going to be exploring how specialty product fintechs can be turned into platform companies. What are the characteristics do you look for in kind of like niche fintech that signals potential for successful platform implementation?
Yeah, I mean, I think on top of the elements that I just spoke on, I think for companies that are looking to pivot from being just a niche, product to expanding to a platform, I think using that niche to be your wedge is really the way in, right? So again, figure out what it is that your consumer really or your customer really needs. What is their pain point? Use that as a wedge to get in, right? And then from there, really look up and down the value chain to see where you can continue adding value and continue owning the customer, right? If you can own, if you start with something like accounts payable, but then you own accounts receivable, you own expense management, all of these other areas that are maybe not as significant pain points, but maybe as a whole pain point, a company would see more value in getting all of those services and tools from one company on one platform, as opposed to the fragmentation, like I spoke about before with regard to compliance. I think that is really the way for companies to expand from just a product to a platform.
Well, Mary, I really appreciate your time today. And again, this is William Mills with Mary Joseph here at Finovate Fall.